Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news that while Trump is playing Putin's puppet, his lieutenants are setting the stage for a new global bout of stagflation. Higher tariff-induced costs for little or no economic expansion. Wall Street is starting to price in what is increasingly likely to lie ahead. The US dollar fell. US jobless claims came in lower last week than the week before, with all the decrease accounted for by seasonal factors. Markets had expected an even lower level from those seasonal factors, so this result was actually a disappointment. And there are now 2.2 million people on these benefits, a rise when a seasonal decrease was expected. For most of 2025, this level has been tracking higher than in 2024. Meanwhile, the Conference Board tracking of their leading index metrics shows a larger fall-off than expected and a negative outlook. Also lower than a month ago is the Atlanta Fed's GDP Now tracker. And we should also probably note that the 6% fall in the Walmart share price overnight. It is dawning on markets that the new public policy settings are fertile ground for stagflation, with no real growth and inflation. Retailers are on the front line for that. Walmart's latest outlook really disappointed markets, even as they reported improved current results. And Taiwanese export orders fell in January from December and came in 3% lower than year-ago levels. Analysts had expected them to hold at last year's level. And China kept its February loan prime rates unchanged at their record low levels yesterday. In Australia, their employed workforce grew by 44,000 in January, above the 20,000 expected, but less than the December gain of 60,000. But there was a virtuous twist to the January levels with the shift to full-time roles, with 54,000 more of them, and part-time roles shrank 10,000. Container shipping freight rates fell 10% last week as the puff goes out of global trade, especially on trans-Pacific routes. These overall rates are now 26% lower than year-ago levels, even if they're still double pre-pandemic levels. But with weak trade out of China, these rates will probably fall much further and quite quickly. The US Treasury 10-year yield is now at 4.50% and down 6 basis points from yesterday at this time. And the price of gold will start today at just under $2,943 an ounce, up $15 from yesterday. And again close to its all-time high of $2,955 an ounce. And oil prices are up 50 US cents in the US at just under $73 a barrel, while the international Brent price is unchanged at $76.50 a barrel. And the Kiwi dollar is now at 57.6 US cents, up 50 basis points from yesterday. Against the Aussie, we're also up 10 basis points at 90 Australian cents. Against the euro, we're up 20 basis points at 55 euro cents. That all means our trade-weighted index starts today at just over 67.2. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.